these leasing short questions. Again, first read the requirement. What will be the current liability? Now that's a tricky portion. So what will be the current liability in Fresco statement of financial position? When they ask you total liability, your life is easy. When they ask you current liability, you have to do one more extra calculation. When they ask you current or non-current, so when they ask you specifically current or non-current, you have to do one more calculation. Otherwise, it is simple. Okay, let's read the question. On 1st October 2003, Fresco company acquired an item of plant under a 5-year lease agreement. The lease required an immediate deposit. Now this word deposit, you need to be careful, of 2 million with 5 payments of 6 million. So it's a 5-year lease agreement and you are going to pay 5 payments in future. Okay, so this 2 million deposit is extra than that. Million paid annually in arrears. In arrears, no problem. End of the year. You should also pay attention. Are you paying in advance or in arrears? So 2 million you pay immediately, and then 6 million end of every 5 year. Commencing on 30th September 2004. The first payment will be at the end of first year. The present value of the future lease payments was 22,746. 22,746. The agreement had an implicit rate of 10%. Now please understand, this 2 million which you are paying, it already has been paid, and after paying it, the future payments are 5 payments of 6 million each. 5 payments of 6 million each, and these are your future payments, and the present value of these future payment is 22,746. I tell you where students sometimes they make mistake. Sometimes they say present liable value of future lease payment. Let me write down like this: future lease payments is how much? It is 22,746. Sometimes students they subtract this, because in some questions the requirement is as such that you have to subtract this 2 million and then find out the liability. In this question it is not. You will not subtract, because it says that the present value of future lease payment, and future lease payments are 5 into 6 million. It is 2274. It is your opening liability. Then you would say accrued interest until first year, which is 30th September 2004. Okay, so this is actually happening on 01/10/2003. This is the opening date here. So it is 10%. I just take the 10% of this, which is times 10%. So end of the year, your liability is actually 22. Let me make it clear, formatting. So it is 22 million was the liability, a lease liability, 2.2 million is interest, total liability is something like 25. Here you will say lease payment, first lease payment. And you made this lease payment on 30th of September 2004, which is 6 million. So you subtract. And I should say that, closing lease liability. On which date? On this date, 30th September 2004. My closing lease liability is 19,021,021. Now they're asking you for at 30th September 2004. So 30th September 2004, your total lease liability is 19,021,021. But this is given here, but this is not going to be your answer, okay? Because you have to find out that how much is your current liability, how much is your non-current liability. Now please understand, your current liability is that portion which you have to pay within next 1 year. You understand that within next 1 year, sometimes students here make mistake, within next 1 year, this is your current liability. So within next 1 year, how much you have to pay? 6 million. So students, sometimes they think that 6 million is my current liability. No, this is not your current liability. You have to pay 6 million. It includes principal and it also includes interest. It includes principal and it includes interest. Interest is never your liability at the beginning of the period. Interest always becomes liability at the end of the period. So you have to find out that within 6 million, whatever is the interest, you have to subtract that interest, and the remaining balance will be called your current liability. I know I have to pay 6 million within 1 year, but this is not my liability at the beginning of the year. Beginning of the year, only principal part is my liability. And the interest amount I should not be treating as my liability. Now, how much is the interest? Let's call like this: interest for the next year. Again, 10%. Okay, 10%. So you calculate how much is your interest for the next period, which is 10% of this. So this much I multiply with 10%. So 1902, this is actually the interest amount I have to pay. So it means that next year when I will pay the 6 million, end of the year when I will pay the 6 million, within that 6 million, this interest is included. And this interest is not my current liability. Liability will be only the principal amount. So I would say that current liability will be actually, and let me call it like 6 million here, like this, and I say 6 minus 1902. This 4098, this is your actually current liability. Your current liability on this particular date is 4098, which you have here 4097. So this is 4098. I think there are some rounding of numbers. If you will, if I will increase this zeros, it will be coming up. This is your answer. Just remember, whenever they ask you to do current or non-current portion, you have to split the interest part. And interest never becomes liability at the beginning. Interest is always accrued at the end of the year. So subtract the interest part. So 6 I have to give, but the next year interest is 1.9. From 6, 1.9 I subtract. This is the principal amount, and this is my current portion of the liability. See, in leasing question, the biggest trick they play are always with the deposit amounts, which are this 2 million. Should you subtract or not subtract? I explained that before. So this is one trick which they do with deposit amounts. So you have to be careful with that. Then another conflict they will trick they will play is they ask you about liability, or they may ask you about current liability, or they may ask you about non-current liability. Now, if they ask you about liability, which means total liability, your life is easy. You can take this 19 million as answer. Your total liability, lease liability as at 30th September is 19 million. That is straight, that is simple. You just write down here this 19 million. No problems. But when they ask you current liability or non-current liability, for current liability, you need to do one more, calculation. And actually for non-current liability, you need to do two more calculations. Here you need one extra calculation, and here you need luckily two extra calculations. I will do this question with non-current liability also, okay? I'll show you that part also. First, let me explain you the current liability thing. Now, as from the definition, you know that the current liability is something which you have to pay within next 1 year. So you can, on the face of it, it looks like that, okay, as with regards to this lease, I have to make a lease payment of 6 million in next 1 year. And therefore you think that 6 million is your current liability, which is not the true calculation, which is not true. 6 million you have to give at the end of the year, okay? 6 million becomes your liability on 30th of September 2005. It does not become your liability on 30th September 2004. Please understand, you have to give 6 million on 30th September 2005. So 6 million becomes liability on 30th September 2005, but you are doing it on 30th September 2004. You are doing it for 30th September 2004 on this date. So how much is the current liability on this date? So this within the 6 million, which will become liability at the end of the year, it includes your interest payment as well. And interest payment did not become your liability at the beginning of the year, okay? Interest does not become liability on 30th September 2004. This interest is for the next year, and this interest will become liability at the end of the next year. I'm talking about beginning of the year. Beginning of the year, my liability is only that within the 6 million, how much is my principal amount? So this 6 million includes principal and it includes interest. Together it becomes liability end of the year. Beginning of the year, only principal is your liability because interest liability becomes end of the year. So you have to find out within 6 million, how much is your interest. So that's now pretty simple. You know that your lease liability is 90 million. 10% is the interest which you have to pay in next year, which is 1.9 million. Total you have to pay 6 million. So within the 6 million, actually, within the 6 million, interest is 1.9. You separate it. You say this 1.9 is not liability at the beginning. Beginning of the year, which means 30th September 2004, my liability is only 4 million, 4.098 million. I mean, this is the difference of these two numbers. 6 million minus 1.902, it becomes your, current liability. Just subtract the interest payment for the next year. This is your interest payment for the next year, okay? Next year interest. You subtract it. I mean, whatever you have to pay interest for until 30th September 2005, you subtract it and the balance becomes your current liability. Okay. Now, in the same question, if they ask you what is the non-current liability, now you know that your total liability at the beginning of the second year, I would call it beginning of the second year so that it is clear. Okay, let me call it beginning of second year. Okay, these dates may confuse you. This is your interest for second year. And now if they ask you that how much is your non-current liability? Non-current liability on which date? On 30th September 2004, like end of the first year or beginning of the second year. End of first year means beginning of the second year. If they ask you what is the total liability, answer is 19,021. If they ask you how much is the current liability, answer is 4098. And if they ask you how much is the non-current liability, so you would say that total liability is 19,021. Interest is not liability at the beginning, minus, so this number minus my current liability 4098. This is 14923. It should be treated as your non-current liability. If they ask you, you would still, if they ask you non-current liability, first you need to calculate your current liability like this way, and then subtract from the total the current portion, remaining is non-current. It's pretty simple. All you need to know is you need to learn how to calculate current liability. So total liability is this. I'll put it in yellow. Current liability is 4098, which means 6 million minus the interest. And the non-current liability is 19 minus the current, whatever is remaining, that is called non-current. So this is where you need to be careful. Closing liability, step one, simple. For current liability, you need to do one more step from interest and calculate interest and subtract it from here. Non-current liability comes after here. So even in a question, they ask you to find out non-current liability. This you have to find out in any case. I mean, that's why I said 2 steps. If they ask you to do non-current liability, 2 steps are needed. First, calculate the current, and then the difference between total and current, that will be non-current liability. Okay, 108, it's a theoretical question. It says the objective of IFRS 16 leases is to prescribe the appropriate accounting treatment and required disclosures in relation to leases. Which 2 of the following are among the criteria set out in IFRS 16 for an arrangement to be classified as a lease? So what are the arrangements? So the lessee has the right to substantially all of the economic benefits from use of the asset. It looks like true, but let's read some others. The lease term is for substantially all of the estimated useful life of the asset. No, this is wrong. This was the criteria under IAS 17, the old one. This is not for IFRS 16. The agreement concerns an identified asset which cannot be substituted. This is definitely an IFRS 16. The lessor has the right to direct the use of asset. No, because if the lessor has the right to direct the use, then lease is not there. We said, and this is actually why I did not take here. This is also true. It would have been better if they have used it from uninterrupted use. I use the word uninterrupted use. That's why I did not said it correct. I mean, I feel that there is little bit improvement needed to be done. So in any case, statement 1 and statement 3 are correct. I mean, this was IFRS 16. It says that the lessee should have the right to use the asset the way he wants to do. Only then he can call it an asset because it gives you control. If the lessor, the giver of the asset, he has the right to direct the use of the asset, it means lessee does not have control. And if there is no control, there is no asset. You need to have control in order to call it your asset. So this is correct, that the lessee has the right to substantially all of the economic benefits from use of the asset. It's correct. And the agreement concern about identified asset. These two options are correct, 1 and 3. You can call it A and C. Okay, then comes our next question, 109. Let's read the question first. Requirement. Using the drop-down box, select what amount will be shown as income from the transaction in the statement of profit or loss for the year ended 30th September. So 109. Tomlet company sold an item of plant for 50 million on 1st April. The plant had a carrying amount of 40 million in the books at the date of sale, which was charged to cost of sale. So it was 40 million in your cost and you are selling it for 50. Apparently you are selling at 10 million higher. On the same date, Tomlet company entered into an agreement to lease back the plant for the next 5 years, being the estimated remaining useful life. So you are getting it back for all of the life. So the asset has a 5 years lease, you sell it out, and then you buy it back for another 5 years. So it means that there is not going to be anyone else using the asset at a cost of 14 million. I don't need to read actually further. I can stop reading it here and I would say no profit, because according to IFRS 15, I mean, it is a question for leasing, which is IFRS 16, but for the sale purposes, IFRS 15, revenue will apply. The contract, the standard from IFRS 15 about revenue. And you can record the revenue or sale when you have given when you have transferred the economic benefits. You have transferred the control. It looks like, it says, you can read further. It says that Tomlet company retained the right to direct the use of asset and retain substantially all the remaining benefits from the plant. So Tomlet actually is not selling the asset, okay? So it is an arrangement of lease and buyback, but this lease and buyback arrangement does not include the transfer of asset. You should remember that lease and buyback has two options. Lease and buyback, when you do, there are two options. One is that asset is transferred, and the other is that asset is not transferred. When asset is not transferred, just like in our example, because it said that asset had 5-year life and he says, I will take it back for 5 years. I will use it the way I want. I will get all the benefits. So when asset is not transferred, there is no sale. And if there is no sale, there is no gain on the sale of asset. You cannot recognize this 10 million gain on sale because the sale did not happen actually. The asset will continue to remain in your books at 40 million. Don't do anything with the asset. You took 50 million and this 50 million is actually your liability, against which you are going to pay 14 million lease payments, which include the interest as well. So don't do anything with the asset. Just create an obligation, just create a liability. It looks like the asset is just given as a collateral. There was no intention of selling the asset, okay? Yes, it is possible only that, let's suppose that asset had a life of 10 years. I sell it back and then I get it back for 5 years. So it means I will be getting 5 years benefit. Remaining 5 years, anybody else can take. Then you can say that sale has taken place. Because asset's life was 10, I sold it with 10-year life asset, and I'm just getting it for 3 years. Remaining 7 years, somebody else will be using it. So you can consider that sale has taken place. But if the asset life is only 5 years, and you are getting it back for 5 years, and you retain all the economic benefits and right to use the asset, sale has not taken place, you cannot recognize any gain on the sale of this equipment. Asset will continue to appear in your financial statements like it was before, and you just create a liability. On 50 million, you receive cash 50 million, debit cash, credit liability 50 million, and then start paying your loan. That's all. So this was because it did not qualify under the definition of IFRS 15 because you did not transfer anything. So this was pretty simple, 109, but need to remember. There was, I mean, it was pretty long scenario they create to just, keep you engaged in doing some calculations. There were no calculations needed. Number 10, 110, a sale and leaseback transaction involves the sale of an asset and the leasing back of the same asset. If the arrangement meets the IFRS 15 revenue from the contracts criteria to be recognized as a sale, how should any profit on the sale be treated? So if you, now before the previous question, we said that it did not meet the criteria. Now let's suppose that it meets the criteria. So if it meets the criteria, then how should you treat that profit? Okay. Option A, recognize whole amount of profit immediately in profit and loss. Of course not. Not whole amount immediately. Defer profit and amortize over the lease term. Defer profit and amortize over the lease term. No, not over the lease term. Recognize proportionate to right of use retained. Right of use retained, like if I told you that there was a 10 years life of an asset and you sell the asset and then you take it back and you take it back for 3 years. So there are two words coming up. One is called right retained and one is called right transferred. So actually what happened then when I sell the asset, I kept 3 years right retained, 3 years, and 7 years rights I have transferred because 7 years I'm not going to use. So this is right retained, this is right transferred. So recognize proportion to right of use retained, not right of use retained. This is also not the answer. Recognize the proportion relating to right of use transferred. This is the answer. You should be recognizing the profit based on right of use which you have transferred. Based on that, you should be doing it. So D option should be your answer. Then we do 111. Let me drag these things down a little bit because we need some space here. 111. Okay, 111. What amount, let's first read the requirement. What amount in total would be charged to Hyper Company's statement of profit or loss for the year ended 30th September 2004 in respect of the above transactions? Okay. P&L, what goes to P&L? So let's start reading it. It says that during the year ended 30th September 2004, Hyper Company entered into the following transactions. On 1st October 2003, Hyper acquired under a lease to obtain a right of use asset, which was initially measured at 340,000. So this company is acquiring an asset. Under the terms of the lease, a payment in advance of 90,000 was made on commencement of the lease. At the time of the lease, you paid 90,000 in advance, being the first of 5 equal installments. Now, please understand, this time it is one of the future payments. Okay, so you should consider that this is your first lease payment. This is your first lease payment. Like we were doing one question before in which we gave 2 million and we just ignored that. But here you will not, because asset is 340 million, 90,000 you are paying. The right of use asset has a 5-year useful life. The lease has an implicit interest rate of 10%. Implicit interest rate of 10%. On 1st August 2004, Hyper Company made a payment of 18,000 for a 9-month lease. Okay, it's a short-term lease of an item of excavation equipment. Hyper wishes to utilize the exceptions available under IFRS 16 leases. So there are two transactions. One is a normal, regular, long-term lease. One is a short-term lease. What goes to the P&L? So essentially speaking, in P&L, what will go? Any interest which you will pay and any depreciation which will happen. Depreciation or amortization, whatever. These two things will go to P&L. If I talk about first lease, if we talk about the first lease, you would say that your lease liability, your lease liability will be 340,000 minus 90,000 because 90,000 you paid immediately. So this is your lease liability. How much is your implicit interest rate? Your finance cost in this thing is 10%. 10% you take the finance cost, which is actually 25,000. So this goes to P&L straight. I know that this goes to P&L. Then what you need to do, you need to do depreciation. So this is one number which is going to P&L. Then you would say depreciation of leased asset. And how you would do that? Again, very simple. Asset is 340,000 divided by 5 years life. So is it full 5 year? Let me see, full year or not. When did we get it? It said very important, 30th September 2004, and you are making, okay, it got on 1st October 2003. So there is a full 1 year thing. You should be careful. If there are 6 months, then I just calculated full year depreciation because it's a full 1 year period. Otherwise, you need to pay attention if it is for 6 months or 4 months or whatever. So this goes to P&L. This is your first lease. Then you have a second lease, which actually is a short-term lease. Short-term lease, you straight away amortize. So how much is your short-term lease? You will say leased asset is, I think, $18,000. And it says 9-month lease. And when did you get it? You get it on 1st October 2004. And you are preparing accounts on 30th September 2004. So August and September, only 2 months. So here you should say 18,000 divided by 9 months multiplied by 2 months. Because in the current period, you've got only 2 months here. So you put equals to sign. And this also goes to P&L, okay? So these are the things which will go. There is no interest here. There is no interest payment in the second lease. It's a short-term lease here. So these 3 numbers you are going to put. Let me add them up. 25,000 plus 68 plus 4. And you get $97,000. This goes into your P&L. And this is what they ask you, that with reference to these 2 transactions, what will be charged to P&L? $97,000.